What's up, guys? My name is Nick and welcome to the channel. In today's video, I'm going to be going over 5 of the best dividend aristocrats to buy right now. And if you don't know what a dividend aristocrat is a company that is in the S&P 500 and has been consecutively growing their dividend over 25 years. But before I get into that, I just want to do a quick update on my portfolio. I'm at $45,871.43. And at the beginning of the year, I was actually at 45,200 something dollars. So I'm only about $600, a little bit more from the beginning of the year, which is insane. And this week in the market, we had that huge gain in the middle and then it started going down, but I'm only down $201.65 and I earned $28.02 in dividends. And then I actually want to show you the all-time because I finally broke earned dividends of $2,700, which is pretty cool. Next goal is 3,000. And then, of course, my long-term goal for this year is to earn $200 on average every single month. Now let's go to the activity feed. For May 2nd, I earned a dividend from Verizon of $14.95. And I earned a dividend from General Mills of $7.21. And then I also deposited $125, and I had 9 buys that day, which is a lot more than I usually have. Let's see, I picked up Colgate, Microsoft, Apple, American Waterworks, Clorox, Home Depot, Costco, 3M, and Pepsi. And just to give you guys an example, if we go to 3M, I bought $3.38 worth. There's only 2% of a share. It's absolutely crazy how they do that. But I'll take it. Still a good stock. Then on May 5th, I had Jeppy, $16.34. Then I had 3 buys of $38.51. I had American Waterworks, Costco, and MasterCard. Just to show you guys again, I always buy such small amounts of Costco. It's always like a few percentage points, which is crazy. But let's get into the video of 5 of the best dividend aristocrats to buy right now. And we're going to start with one of my favorites. We've got Realty Income Corporation is a monthly dividend paying REIT, and it's my favorite REIT. And I actually want to show you 20 of their top clients. So if you see this star, that means they're an investment grade client, which means they're safer. And so as you can see, they have Walgreens, 7-Eleven, Dollar General, Dollar Tree, FedEx, LA Fitness, Sainsbury's, BJ's, CVS, Walmart, AMC, B&Q, Regal Cinemas, Red Lobster, Tesco, Tractor Supply, Lifetime Fitness, Home Depot, Fastmart, and Circle K. So they have a lot of different brands. And it says up here, they have 70 different industries and a 98.6% portfolio occupancy. I butchered that one, which is pretty solid. So that's one of the reasons I love this stock, because it's very diversified. And right now, it is trading at $66.12. It is currently down 2.1% in the 1 year. It is up 18.75% in the 5 year and up 72.32% in the 10 year. And year to date, it's actually down 7.13%. So I'd say it's at a little bit of a discount. So I think it's a good time to start putting money into it. And we have an FFO of 3.96, a PFFO of 16.68. The dividend yield is looking pretty good at 4.48%. We'll hope this stock actually goes down a little bit more so it can bump up that dividend yield, get back to the 5%. Then we have a market cap of 40.40. And we're going to the financials now. Looking at their rental revenue, you can see over the years they have grown. And even they did pretty good even during the pandemic, and their upcoming revenue is looking solid. Then if we go into their net income, you can see that it was trending upwards, and then during the pandemic it went down a little bit, but now it's coming back to a higher level than before the pandemic, which is always great to see when you look at the numbers of a company. So next up, let's go over to my favorite part, the dividends. So we have that crazy payout ratio of 282.45%. I don't really know what to make of that. I don't think that's completely accurate. Because like I said, this is a Dividend Aristocrat. This is a company that's been growing its dividend 25 years at least. So I would think that they have the revenue, or they have the money to pay out that dividend and to continue to pay it out. And one thing about REITs is they actually have to pay out 90% of their income in dividends. So that's why they usually have higher payout ratios. And next up, we have that 5-year growth rate, pretty low at 3.71%. However, I do want to say that I think Realty increased their dividend by about 5% last year. So we'll see how they do in this environment with increasing interest rates. But as far as I'm concerned, I'm still going to buy Realty Income stock. This is one that I own and one that I love. So let's move on to our second stock, which we have Cisco, which they're a food and kitchen equipment company. I do bookkeeping for a restaurant owner, and she spends a lot of money on Cisco, just buying all kinds of stuff every single month. She gets orders from there. And just to show you some of their products, they have meat and poultry, seafood, dairy, produce, bakery, desserts, food service supplies, beverages, specialty, pantry staples. And that just gives you an example of what they sell. And right now they have a price of $82.48. They're down 4.38% on the year. They're up 50.24% on the 5-year and up 196.8% on the 10-year. And then year to date, they're actually in the green, 4.47%. They have an EPS of 3.05, a PE, which is a little bit high, on the 27.08, and they have a 2.38% dividend yield and a market cap of 42.44 billion. And when we go over to the financials, you can see that their revenue has increased over the years. Of course, the pandemic, a lot of restaurants were shutting down, so their revenue declined. But it's, as you can see right here, the revenue is coming back, and that highlighted everything. Next up, we have our net income, which was actually pretty high before the pandemic. It went down. It's starting to come back up. So this is something you want to look at with this stock. But I think more people are going to restaurants, and people are looking for more experiences instead of buying goods. So I'm fairly confident that Cisco will come back with their net income. But as we saw, their revenue is increasing. Next, they have a payout ratio that's pretty high actually, 79.83%. However, they do have a solid dividend growth rate of 7.99%, which is something I do like to see. Next up is our third stock, which is McCormick. They sell seasonings, spices, flavors, that kind of stuff. And I'm going to show you some of their products. We have the ground cinnamon, vanilla extract, which I think is pretty good if you make cookies. Whatever that is, assorted egg dye, cream of tartar, ground mustard. As you can see, they just have a ton of stuff that you'll use when you cook. And we have a price of $97.54. 1 year, they're up 9.19%. On the 5-year, they're up 94.26%. And on the 10-year, They're doing really well, up 239.86%. And then year to date, they're also up just a little bit, 1.8%. They have an EPS of 3.18, a PE of 30.68, a dividend yield of 1.52%, and a market cap of 25.85 billion. If we go into their financials, you can see that their revenue has increased every single year, which is great to see. And then their net income is also increasing over the years. So everything's checking out over there. Now, if we go to the dividends, they have a good payout ratio of 46.96%. They have a 5-year growth rate of 9.55%, which is fantastic. I love a growth rate. I love a 5-year growth rate that's over 7%. It's always great to see that. So our fourth stock, we have Caterpillar, which they are the largest construction manufacturer. And I actually used to own this stock. I actually sold out of it because it's a cyclical company. And I just figured with the pandemic and everything that's going on with that I just didn't want to hold them anymore. But I still think they're a great company. And once I show you the numbers, I think you will too. So they sell their normal tractors, their new products. They rent equipment, used equipment. They have their parts, merchandise, and future technologies that they're developing. They're currently selling at a price of $214.65. They're down 10.93% on the 1 year. However, they're up 116% on the 5 year and up 144.48% on the 10 year. And year to date, the third straight stock, they're up 3.7%. They have an EPS of 12.36, a PE that's pretty good at 17.36, a dividend yield of 2.07%, and a market cap of 115.17 billion. Let's look at the financials. On the revenue, you can see that it was trending up. Then during the pandemic, it went down just a little bit, and now it's coming back as construction has been booming, especially in my area. And then net income has actually increased over the years, dipped during the pandemic, but came right back as interest rates were low, and it is actually doing better than it was before the pandemic, which is a great sign to see. Then if we scroll up to the dividends, we'll see that they have a great payout ratio of 41% and a great 5-year dividend growth rate of 7.59%. And I'm not sure why it says 1 year, but they are a Dividend Aristocrat. And now let's go into our last stock, which is Church & Dwight, which is a stock that was on my watch list. And if we look at their products, you could see they have consumer brands, which is like detergents, cleaning supply, health and well-being, home care, personal care. So they're kind of like a baby Procter & Gamble, if you want to put it that way. And they have a price of $95.73. They're up 9.49% on the year, up 89.11% on the 5 year, and up 253.12% on the 10 year. And then they're actually down 5.88% on the year. They have an EPS of 3.16, a PE of 30.30, and a dividend yield of 1.1%, and a market cap of 23 billion. And if we go into their financials, we will see that their revenue has just continually gone up, even during the pandemic. And then also you can see their net income has gone up. Next, we look at their dividends. They have a very healthy payout ratio of 33.75% and a great 5-year growth rate of 7.14%. So this is another stock that I think would be a good one to own, especially since they have a lot of essential products and brands. And last but not least, we look at my dividend income. You can see currently in May, I'm sitting at $38.50. I've earned 816 so far in 2022 with monthly dividends of $68.02. So guys, that is the video. Thank you for watching. If you'd like this video, comment down below. I'll answer all your comments, and subscribe for more investing content. And there are links in the description for M1 Finance and Webull if you'd like to get some free stocks and free money.